Features of the joint stock company. Artificial legal person. A joint stock company is an artificial legal person created by law. It does not have any physical existence. But the law still considers the joint stock company as a legal person. So the company has its own name. Also, it can enter into contracts with various individuals or businesses just like a natural human being. Common seal. Since law considers joint stock company as an artificial legal person, it can enter into various transactions and contracts with third parties. It can buy and sell properties or goods in its own name. But since a joint stock company does not have any physical existence, it cannot sign the legal documents. So a common seal is used in place of signature of a joint stock company. A common seal looks like this, something like a paper punching machine. It works like a paper punching machine. The punching machine which is used during the filing of documents. It creates an impression which is something like this. However, the impression doesn't have any color because this impression is embossed on the papers, on the legal documents which the joint stock company is supposed to sign. This is how the common seal is used in place of the signature of a joint stock company. Separate legal identity. A joint stock company has a separate legal identity. So, in eyes of law, the joint stock company and the owners are different entities. In case of a sole proprietorship firm or a partnership firm, the business and the owners are not considered as separate entities. However, in case of a joint stock company, the owners and the company are considered as separate entities. Limited liabilities of the owners. The liability of the owners of the joint stock company is limited only to the extent of their capital in the business. The liabilities of the owners in case of a sole proprietorship firm or a partnership firm is unlimited. However, in case of joint stock company, the liabilities of the owners is limited. What this means is that the personal assets of the owners will never be used to pay off the liabilities of the company or the business. Since the joint stock company has a separate legal existence, the liabilities of the company cannot be treated as liabilities of the owners. Mandatory registration. The registration of a joint stock company is mandatory. Every Indian company should be registered with the registrar of the companies as per Indian Companies Act. Separation of ownership and management. The ownership and management is separate in case of a joint stock company. The owners or the shareholders appoint board of directors to manage the company on their behalf. The board of directors run the company on behalf of the owners or the shareholders. Minimum and maximum membership. In case of a private limited company, minimum 2 members are required and it can have maximum 50 members. In case of a public limited company, the minimum number of members required is 7. Upper limit on the number of members or shareholders you can have in case of a public limited company. Perpetual succession. The joint stock company enjoys perpetual succession. The joint stock company does not come to an end in event of death, insolvency or insanity of any of its members.